So all of us are homeowners.
Woo! Let's go. Come on.
Right?
Thank you.
I refinanced about 5 years ago during the craziness of COVID. Monty, when did you buy a house?
7 years ago. Had an ARM, actually, at that time.
Hey, me too.
Adjustable rate mortgage. So
Wow.
I bought in 2023, so been there for like a year and a half.
I have been in my house for a compelling, inspirational, nearly insulting 4 months.
Yes.
And I have a fixed rate.
He's a very proud homeowner.
I really am. I really am.
Proud. One of Iowa State's old football coaches, Paul Rhodes, he'd say how proud he was of his team.
I couldn't be prouder. I could not be proud. No, I am so proud. Listen to me. I am so proud to be your brother.
All the time. So it's just awesome. If you're thinking about buying a house in 2025, what do you recommend a potential buyer starting to do as they prepare to start talking to banks?
That's a good question. I personally feel buyers that are well prepared actually sit down with an agent to get the process of what it looks like, because some really good agents are going to walk you through every step of the way and give you kind of a map of what to expect.
Yep. Yeah. Adding on to that, I was just going to say pretty much the same thing, but get your ducks in a row. So financing, what's your budget look like? In all honesty, my budgeting was not the greatest, but when we started looking towards buying a house, okay, well, we got to know how much we can actually afford, because your lender's going to give you an amount that's probably more than you're wanting to spend, and so going into that meeting, okay, this is kind of the monthly payment that I want to go at, and then also gathering documents that they might ask you for can save a little bit of time. So just stuff like that, just getting your ducks in a row.
What can a buyer expect when they fill out that initial application, and what that experience can look like?
As a former loan officer, a lot of things they're looking for is they're going to ask you, hey, your job. How long have you been in your job? What are your debts? What's your down payment? What do you have in your account? These are all normal questions. I know I get a lot of people that I talk to like, oh my gosh, it feels like they're trying to dig into my life. I'm like, yes and no. It is part of their pre-qualification before they do an application to give you an expectation of what to expect.
One thing I want to touch on too, when you apply for a mortgage, you're essentially asking someone to give you hundreds of thousands of dollars.
Can I have some money, Pot?
So they are going to get up all in your business. They want to make sure if they're going to give you all that money, that you actually that your application reflects you actually have the money. Your alternative is to pay for a house with cash or borrow money. If you're going to borrow money, you got to play the game, and you got to play in the game means you got to comply and give over stuff to support your application. So that's the reality with that.
So can you just go through what that percentage of debt to income ratio is that they typically pre-approve you for versus what you should maybe stick around?
Generally speaking, 30 to 35%. Debt to income ratio. And Matzi hit on this. It's like, for simple math, if your household makes $10,000 a month of gross income, and then the bank can lend up to 45%, then that means they'll give up to $4,500 towards your house payment. So you start there. Now, if you have $2,000 of debt you have to pay each month, then you reduce it by $2,000, so then your house payment can be up to $2,500 a month. So that's why the budgeting step is so important early on, is to organize your budget and actually itemize it. Then you can kind of have an idea going into it. Now, we do work with people that are at the beginning of their careers. I've worked with doctors before where, in 2 years they're going to make triple the amount that they're making now as they're doing residency. So it's a case by case how much you should go. But the biggest thing is that's why it's so important to work with a real estate professional to understand what's going on, because we have more of a holistic view of the whole process. We're not just focused on the sale, we're focused on the family, and we're focusing on what's best for them. What's interesting about loan officers, you have to remember, is that a lot of them, they're selling a product and they're not really a consultant. So some loan officers, they'll just say, hey, congratulations, you're pre-approved for a $500,000 house. You're like, oh, that's awesome. Then you look at all the options, that's great. They don't even give you a payment until after you're under a contract. Many loan officers, they just view themselves more of salespeople than consultants. And so as a result of that, when you get your loan estimate, if you get one. Some loan officers don't really emphasize it. They just will send it electronic signature. That's why it's important to work with a good local loan officer, in my opinion. They will help, but a lot of them still have more of a sales perspective than consulting. If you're looking to buy a house, how much money down will banks require from you?
3%, as little as 3% is the, I think, bare minimum guideline with a conventional loan. And I don't want to get too much in the weeds of products and loans, but another misconception is FHA is the best loan for me, and that's not true. FHA is 3.5% down, where conventional is 3%, but it all comes down to your credit score as well.
Crazy story. I won't say any names, obviously, but we actually had, with different grants line up and loans line up and that kind of thing and different products, I had a client bring -$3,000 to closing. Yep. So they got a house and they got $3,000.
That doesn't happen often.
Doesn't happen often, but
there's a success story.
But one thing too is like savings sometimes is the biggest hurdle to buying a house, and that's why it's important to understand what the down payment requirements are from banks. Now, a really important thing is we focus on two things as you prepare to buy a house. I focus on like rainy day fund, and then also your down payment. Now, here's the kicker. If you're a first-time home buyer, you might qualify for some amazing grants where you don't have to really ultimately bring anything down. So if you can save that rainy day fund, you might qualify for $5,000, $10,000, $15,000 of grant money that's out there. And so a lot of first-time home buyers don't know that they could qualify for a grant, and this could speed up the process. I know when I first got married and we were just scraping by, I mean, to save $10,000 would have taken us years to do. So the point is, you might qualify for $10,000, $15,000 of grants, and but I would say try to have that rainy day fund if you can, 1 to 2 months of mortgage payments, and then if you have that, you might as well look into grants if you want to buy, and you might be able to save 2-3 years to buy now.
Again, more questions about that, reach out. Again, we're going to go back to the buyer consult, because I think the grants and all that things are great, but I think if we want to go over at least the bottom line of the bare minimum, so you can have that expectation, then everything else is awesome.
Step one, schedule a home buyer consult with one of us or with an agent that's great. So that's step one. Step two is really organize your budget. Step three, be prepared to apply for a mortgage with a good local loan officer. Here's the deal. When you work with us, the reason why you talk to us first is because we know a lot of local loan officers that offer many different products. We are generalists. We know a lot of things. Doesn't mean it's going to be the right loan officer, right product, but if a bank is offering certain products that are not very good for your specific situation, guess what? We might know of another product that could help you, or a different bank for you to go to. And I think it's really important to understand that, because banks are limited by the products they offer, and we know a lot of different banks that maybe has the right product for you that you may not know about, and the loan officer you're approved with is not going to disclose or tell you about it. After you get pre-approved, then the excitement begins. We want to look at houses that fit your budget. And a lot of buyers sometimes make the mistake before getting approved. They look at houses they assume they can afford, and then it's really hard. It's easy to go up in your home search in value. It's really hard to go down. So it's important before you start looking, you get everything organized with that. These are some tips if you're looking to get pre-approved and start the mortgage process, that this is where you start. Just follow those 3 steps, and I think this will set the foundation to your home buying journey.